Hello, everyone. Welcome back to the show. Now, for something that has existed for thousands of years, it is surprising how little we truly understand it. Gold has shaped economies, influenced power, and held value across generations, and yet, for most people, it remains abstract. We hear about it, we reference it, but very few actually understand how it works. Today, we're exploring that gap. Joining me is Simon Popple. I hope I pronounced your name correctly.
That's right. Perfect. Thank you.
Okay, okay. Who focuses not just on why people invest in gold, but how they actually navigate it in a practical and structured way. Simon, welcome to Thought at Last. It's a pleasure to have you.
It's great to be here. Thank you very much.
Awesome. So, Simon, before we kick things off, here on Thought at Last, I and my listeners, we want to get to know our guests on a personal level. So, if you don't mind, can you tell us more about yourself?
No, sure. I sort of initially started off doing the sort of MBA investment banking route, then went into property and did very well there as a director of, or the youngest director of one of the world's largest private property companies. But a- around that time, my parents retired and they asked me to kind of help them with their finances. And being a bit boring, I did what's known as a present value analysis, which was kind of assuming what how much money they would have in sort of 20 years' time,
Yes.
assuming various levels of inflation. Now, at the time, inflation was very low, so it didn't really bother me. And you know, the numbers didn't look too bad if you assumed low inflation. But I found that as I assumed slightly higher inflation, it really kind of decimated their savings. And
Oh
so
my God.
it was something I looked into a lot more closely. And that's sort of what led me to gold because, I got into a situation where I was thinking, well, it's all right having, plenty of money in retirement, but, you've got taxes and you've got inflation to worry about. And so what I found, in all honesty, is people kind of, even though they don't know anything about it, they kind of understand gold and they kind of appreciate how useful it can be for a portfolio. But that's as far as it goes. They don't actually do anything, and they don't do anything largely because they don't know how to do anything. And so that's really what I'm about. People come to me saying, "Look, I want to invest in gold. How do I do it?" And that's how I help.
Oh, wow. Awesome. Thank you so much for that wonderful introduction. And once again, it's a pleasure to meet you, Simon. Now,
Thank you.
Simon, I want to ask you, why do you think, something as historically significant as gold is still so poorly understood today?
I think a lot of it is because people tend to do what their parents did, and uh, our parents. Probably didn't invest in gold. They used to do things like bonds and equities, and property has more recently been very popular. And I just
Yes.
don't think gold was really kind of on the agenda. And because our parents didn't do it, we don't know much about it, and therefore, there's a huge gap in knowledge. And that's what I'm trying to fill.
Yes. And to add to everything you said, from my own understanding, I think it's because of, mainstream, finance. Nobody really talks anything about gold. You always hear about, buying stocks, buying bonds. You even hear much more about cryptocurrency, compared to gold. So I feel in a way maybe it's some kind of, where they are kind of like gatekeeping. I don't know if that's what's going on, but I think it may be something of the sort. What do
Yeah,
you think?
no, I would agree with that. I mean, I think that if you speak to a financial advisor about bonds or equities or property, um, either they know something about it or there's someone in their organization who knows something about it. But gold is an area where very few companies seem to have any expertise. And obviously, you don't want to say, well, I don't know anything about it. It's much easier to say, let's talk about something else. And I
Yeah,
think,
yeah.
um, probably. I'm not saying it's entirely because of that, but I think that that's probably one of the reasons why some people don't like to discuss it with their clients.
Okay, so now I want to understand why gold is so valuable. Of course, I know that it has lots of uses in technology and other aspects of life in general. But there's difference between knowing that something has value and understanding why it has value. Now, everybody knows that gold has value, but no, I think just a few people, maybe most people, don't understand why it is that valuable or why it has the value that it has. So, can you kind of like give us a clarification why it has that value?
Yeah, sure. I mean, first of all, how did gold get to us? It kind of came from outer space in meteorites, and so if we get hit by another meteorite, we won't really be around to tell the story.
Oh
So
my,
I think it's fair to say that it's finite in supply.
yeah,
Also, you can't print it, um, which is
yeah,
important.
yeah, yeah, yeah. You
And
definitely cannot print it.
I think another thing I like about it is it's a global asset. It's viewed as valuable anywhere in the world,
Yes.
and there aren't many assets that have that
Have
kind
that
of
characteristic.
cachet.
Yes.
So I think that's one of the reasons why it's considered valuable. But it's quite interesting because even though it's considered valuable, it's actually very difficult to value because if you look at conventional methods of evaluation, they all tend to lean on cash flow. Either with property, you've got a yield, companies, you've got cash flow.
Yes.
But gold doesn't actually generate any cash flow. So it's quite interesting because uh, it's a key asset, but people find it very difficult to value. And I think that's probably one of the reasons why a lot of people shied away from it because they're asked what's it worth, and people kind of throw their hands up in the air and go, well, I don't know. It's higher than
Yeah.
it used to be or lower than it used to be, but um, that's really the only method of valuation that people can use is comparable and comparing what the price is now to what it was in the past. So uh, I think that therein could lie an opportunity because it could be that it's worth a lot more than people think it is.
Yes. And to add to everything you've said, I'm just trying to speak of my own understanding. Like, and please, if at any point I make any mistake, please correct me so I don't, send out wrong information or anything of the sort. So I think the reason why it's like that, aside one of the major reasons why people may not necessarily understand how valuable it is because of the fact that there's 24 carats gold, there's 14 carats, there's 10 carats. Most people don't even know what a carat is or what that is, first off. Secondly, when I usually trade, metals. So when I go on the charts, I would see a price there. I think currently it's at $4,000 or maybe around $4,000 or five. I can't even remember. It's been a while. But anyways, I would see that I'll be like, okay, now, definitely this amount has to be for a particular weight. Now, what weight of gold costs this amount? You'd go to Google and search. A random figure will pop up. I think it's in pounds or is it in it's first of all, it's in a unit of measurement that most people haven't haven't heard of before. So that in of itself is already making it's making it look too complex. And if you check when it comes to finance, people use their money according to, or people invest, or people deal with money essentially according to their know-how, according to their knowledge. People that just know how to calculate percentages of, okay, how much will I get from this? If I invest this as a compound interest, how much do I get? Simple interest, how much do I get? So you see people saving money in banks and stuff like that. And people that have a kind of a higher understanding that they deal with stocks, bonds, they know what the metrics are, they know the formulas, the equations to use. But when it comes to gold, it's as if it's another field of its own. There are people that are there that they are quite esoteric when it comes to understanding that. And I think it mostly has to do with all these jewelers, people that sell jewelry and the rest of them. But I think what the question I'm actually working towards is, I think it's because of just the complexity around trying to, the metrics when it comes to gold, how to calculate, okay, how much is this weight of gold worth? How many carats is this? How can I tell 24 carats from 10 carats? There are just lots of things involved. I think it's the reason why it's something that most people just try to avoid so that they don't end up losing money when they're trying to, understand how it works. They rather just deal with something or invest in something that it's already mainstream that everybody understand that you can literally ask, ask a random person on the street, how much interest would I get if I made this investment? And they will be able to give you an answer. So do you think that's the major reason why it's understanding its actual value may be kind of difficult for the majority of people?
Yeah, I think it's certainly a reason. I think there's an element of education about investing in gold, and uh, it's a lot of it is about familiarity or lack of familiarity because whenever you do anything for the first time, it's uncomfortable, and
Yeah.
people would rather do something they're comfortable about. And if you're, it's very interesting because I get people saying, "Oh, I want to have this level of income. Will I get that from gold?" And you just don't know. The price is really volatile, but that's uh, gold has averaged an annual return of 10.6% a year in sterling terms for over
Wow.
25 years. Um,
Wow.
but it's volatile. It moves around, and
Yeah.
sometimes it will go down, sometimes it'll go up. But over the longer term, which I think is why it's particularly good for pension money and longer term investing, it's done very well. But the volatility scares the hell out of people, and I think that that's one of the reasons why people have shied away from it because um, you know even recently you've seen the price of gold drop when Israel and the US went to war with Iran. Now,
Yes.
logically, you kind of expect the price to rise, but it didn't, and it fell. And I think if you're someone who doesn't really understand gold and you're doing it for a short term, when I say short term, I'm talking about less than a year, um, and you buy it and then you see the price go into free fall, I could understand why it's scary. And but I think that people miss a really fundamental point, which is um, you can't control the markets, but you can control how you invest in them. And I think a lot of
Yes.
people invest in gold in the wrong way. And they put all their money into one asset, which is, I think, wrong. Um, they should invest across a variety of different assets, and I don't think they should put all their money in one go. I think you put some in, you average in, and you average out, and one of three things will happen. Either the price will go up, so your existing investment's done very well, and you decide whether to
Yeah.
put more in. The price has gone down, so you can make your next investment on a better terms than previously, or the price has stayed the same. And so, uh, it isn't a case of buy gold now, buy gold today. You know, anyone who says that to you, um, I just don't think that's a smart way of investing. I think a smart way of investing uh, is to both have a system, which is what I do, and
Yes.
get people to invest over a period of time.
Wow, awesome. Thank you so much for that wonderful clarification, Simon. Now, Simon, you mentioned inflation as a turning point for you. Now, what's it about inflation that fundamentally changes how people think about money? And how is inflation, how can we connect inflation to gold? How can we like connect them, put them in the same line? Essentially, how does inflation affect gold, or how does gold affect inflation? I honestly don't know how to ask the question, but I hope you understand.
Yeah, no, exactly. Look, I mean, you have to be very careful what you say because inflation only goes up and the gold price goes down and up. So,
Yes.
um, to say gold is always a good hedge against inflation is untrue because you could buy gold, it could go down, inflation goes up. Hang on, you haven't got a hedge.
Oh,
But if you look at, going back to that 10.6 number that I mentioned,
yes.
as the average annual return for over 25 years. Now, that's obviously a lot higher than inflation. Um, Now, will it be 10.6% for the next 25 years? We don't know. But historically, gold has done pretty well across the long term against inflation. But there are clearly periods where the gold price has gone down, inflation's gone up, and therefore it hasn't been a hedge. But I think that what inflation is one point, but I think I look at the drivers of the price. I use a term called MIDI, which stands for market uncertainty, interest rates, debt, and inflation. And so, what I tend to do is I tend to say, okay, look, this is where the gold price is. We've got a lot of market uncertainty. Interest rates, on the one hand, you'd expect them to stay the same or go up because of inflation. But because
Yes.
of debt is so high, it'd be quite difficult to increase interest rates a lot because uh, it means servicing the debt would be very expensive. And I think also uh, the model has sort of changed. Back in the day, interest rates, your economy would overheat and you would increase interest rates and it would cool down. But because
Yes.
we've become so global, here in the UK, our economy inflation could get quite nasty, but that's largely because of, let's say, energy costs, which we're importing. And so, you end up with a situation where you've got actually sluggish growth throughout the economy, um, high energy costs, um, and you're kind of thinking, well, that means we've got inflation. We should calm things down with higher interest rates. But if you have our higher interest rates, then you kind of kill the economy because,
Yeah.
you know what I mean? It's sort of um, higher interest rates aren't going to bring down energy costs, and people are really hurting with the cost of living. And
Yeah.
I don't think it's just the UK. I think that's across the world. So
Actually,
I think you need to be careful of kind of assumptions that you use. And going back to gold, I think that the price is largely driven by the US. So I think the recent activity in the gold price of um, the uh, the US was expected to continue cutting interest rates because of this energy spike caused by the Iran war. Um, it looks like they'll be cutting energy costs, or sorry, cutting interest rates less, and therefore the gold price has come off. But um, yeah, I think we're in a world, a changing world, and it'll be very interesting to see what happens over the next few months because it might be that things are different in the future to how they were in the past.
oh, wow. Thank you so much for that wonderful clarification, Simon. Now, Simon, most people think of money as something that is stable, as a stable commodity. Well, I don't, but I think most people do. Do you think this perception is accurate? And can you explain if it's not accurate or it's accurate? Can you like give us an explanation as to why?
Yeah, I mean, look, money is. I think that um, I need to be clear here. I think gold should be part of your portfolio. It shouldn't be your portfolio, so to speak. Um,
Yes.
but if you've got money, uh, people go, well, I've got money, so that's stable. But you need to remember that currencies move, and I think that having some money in your own currency, there's absolutely nothing wrong with that whatsoever. But I think having a proportion of your wealth in gold alongside your currency makes sense. And that's really what I'm advocating that people do. They have a mixture of currency and gold. Currency is obviously very liquid. You can spend it, you know, very easily. And likewise, so is gold. You could liquidate gold, especially if you've got it with a bullion dealer. A lot of dealers can store and insure it for you and liquidate it very quickly and put the money back into your bank account. So um, I like both. And I wouldn't advocate having all gold or all currency. I think you need a bit of both because uh, we don't know what's going to happen with inflation. We don't know what's going to happen with the gold price. Um, so I think having both is a good way of kind of hedging your bets a bit.
Oh, well, thank you so much for that wonderful clarification. And as the old saying goes, don't put all your eggs in one basket.
Exactly that, and that's why I think people should have a bit of gold because if you think about it, you've got your. I'm in the UK, so my house is in sterling, my uh, pensions in sterling. A lot of people earn money in sterling, so
Yes.
having some gold just means that you've got exposure to something else, which I think is quite nice.
Wonderful. Now, there are many ways to access gold. I'm saying it, but honestly, I don't know the ways. How should people, go about accessing gold? Do they buy it digitally? Do they buy it physically? Can you give us some ideas or some ways that someone can get access to gold before they can, sorry, so they can try to like invest in it or add to their portfolio?
Yeah, absolutely. Well, I mean, I think this is one of the areas that I really help people in because people say, I want to get gold, and there's lots of different ways you can be in the gold market. And I don't think you should just get physical or just a, a fund or just a company. I think you want to have a blend of you want to have some physical. I suggest you have a fund, and then you could have very large companies, some more smaller companies, perhaps some
Yes.
explorers. There's lots of different ways you can get exposure to the sector, and that's one area that I help people in. When people get if people go to www.goldprogram.co.uk, they can see the framework that I suggest they have. I'm happy to let people have that for free. But if they want to see the list of companies and funds that I suggest they select from, then that's what I charge them for. But they don't have to pay that. They could just go to the website and get a structure um, that means they've got lots of different types of investments. And going back to having not having all your eggs in one basket, what they can do is they can say, look, I've got exposure to gold through 5, 6, 7, 8, 9, 10, 11, 12 different vehicles, whatever it is. And I think that's a sensible way of having allocation to gold.
Oh, wow. Thank you so much for that wonderful response. Now, at a deeper level, what mistakes do you think people could make when it comes to approaching gold as an investment?
I think there's quite a few mistakes people can make. I think that they need to be very clear what they want from their investment. Um, Now, a lot of people say, I just want to make lots of money, but you need to be very careful about how much risk you take because some investments are far more risky than others. For example, explorers, even though you can make 30, 40, 50, even 100 times your money, they're a lot riskier than, a large producer.
Yes.
And so I suggest, having a large producer and an explorer in your portfolio. But let's say you've got um, 10,000 to invest, I'd probably suggest having more like, 2 or 3 thousand in your large producer and more like 1,000 in your explorer because you want to manage your risk. And you can still get a very good return from a large producer. Quite often they pay a dividend. Um, and you can still do very well from them. But you don't want to put all your money into an explorer because even though if they come off, the returns can be life changing. You don't want to put all your eggs in that basket. You want to have some lower risk um, exposure. You might even have some physical gold as well, or a fund. But I always suggest that people have a variety of different types of investments. So, if one comes off, that's fantastic. But if it doesn't, it's not the end of the world.
Oh, wow. Thank you so much for that wonderful response. Now, you talked about building a framework. Why is structure so important when it comes to investing, especially in gold?
I think it's important because um, companies and funds that they're all different, and uh, they're different in so many ways. And you, but by investing, let's say, in an Australian company, you've got exposure to the Australian dollar. Um,
Yes.
even though it could predominantly be a gold company, it might have, let's say, some silver or some copper or whatever. So you might have a bit of exposure to copper and silver as well as the Australian dollar, and then you may have a Canadian company that's predominantly gold. So you've got exposure to the Canadian dollar as well as gold. And then you may have a US company. So you've got exposure to the US dollar. So you kind of like what I like about it is not only can you get exposure to gold and the gold price, but you can get exposure to other currencies and other commodities. And
Yes.
so it's a way of kind of having a very diverse portfolio, albeit the gold is let's say the your anchor investment, if you know what I mean.
Okay, thank you so much, Simon. Now, Simon, if someone is just starting to think seriously about investing and possibly investing in gold, what is the better first principle they should understand? Like, what is the first step you would advise them to take?
I think that the first thing I would say is, get started, do something. A lot depends on to use the gold price the gold program system. I'd say you probably want to have around $10,000 to get the kind of diversification that I tell people about. I mean, I should add, I don't touch your money. I just show you how you can do it. Um,
Yes.
but if someone's investing a large amount, then that's where I can help them. If they just want to invest a small amount, then just set up an account with a dealer, and you want to get a reputable dealer, and you can buy a coin, for probably a couple of hundred uh, dollars. Okay, so yeah, $200. You can get yourself a coin, and depending on where you live, you may want to take delivery of it. You may not. You may want them to store and insure it for you. But yeah, you don't need to be rich to start off. A couple of $100 is probably what you need to start off, and I'd suggest people do that.
Awesome. Now, Simon, I have some rapid fire questions I want to ask you. You can either answer with a phrase or a sentence. And if you feel you cannot pick one or the other option, both options are available. So the first one is risk or security.
Uh, I think I like security, because I think it's important that uh, you're secure
Have security.
with your money. So yeah, out of risk and security, I'd probably pick security, and um,
Okay.
if you get that right, then
So the next one is okay. The next one is physical or physical gold or digital gold. Which one would you prefer?
oh, physical every day of the week.
Yeah.
Um, you can't print physical; it's there.
Yeah. Now short term holding or long term.
I think long term because as I mentioned, the gold price is volatile, but excuse me, if you hold it
Yes.
for a longer period, then the volatility tends to smooth out. So I think people investing in gold um, should do it for the longer term. When I say longer term, I'm talking more than a year.
Oh, wow, awesome. Now, one word you would use to define value.
Um, I think value is it's intrinsic. I think it's probably um, a key word because it's gold has got intrinsic value. You look at gold and it's valuable, and um, you can take it anywhere in the world and it's viewed as valuable. That's not the case with excuse me, with other um,
Sorry.
products.
Oh, wow, awesome. Now, this is my final question before we wrap up for today, Simon. This has been an absolutely wonderful interview. I've learned a lot about, gold and investment from you. Now, when you take a step back and look at money, value, and investing as a whole, I forgot to out gold, gold, money, value, and investing as a whole. What is one idea about wealth and security that you think most people misunderstand?
Um, I think that people misunderstand it because um, they haven't done it before, and if they haven't done it before, then they don't. Uh, uh, if they haven't done it before and their friends aren't doing it, then they kind of think, well, why should I do it? And I think you're kind of missing a trick there. Um, I think also I would say that if you want to invest in the sector, now is a good time to look at it. You don't want to wait until the price has gone even higher. If that happens, and then you're investing at a much higher level. I think it's always good to be one of the earlier people rather than one of the later people.
Wow. Thank you so much for that wonderful advice, Simon.
Well, thank you very
Simon,
much.
this has been a really insightful conversation. As I've said before, I've been able to learn a lot about gold, about how people think of value, money, and long-term security. I really appreciate you coming on Thought at Last and enlightening I and my listeners. So where can my listeners, learn more about your work, connect with you, and so you can help them with their gold investments and whatnot. And if you have a book, where can they get copies of your book?
Yeah, if you go to www.goldprogram.co.uk, I've got a suite of services that I offer on there, showing people how to invest in gold. That includes a book, The Beginner's Guide to Investing in Gold, which is 9.99, which has got a couple of bonuses. So it's less than the cost of your lunch. And,
Yeah.
um, and then it goes right up to the gold program. But if you're just starting, then just put a toe in the water and get the book. And it's an ebook, and yeah, I think you'll find it very useful.
Wow, awesome. Once again, Simon, it's been such a pleasure to have you on my podcast. Thank you for taking the time out of your busy schedule to join me and sorry, to enlighten I and my listeners. I really had a fabulous time. So do have a wonderful day and take care of yourself. And of course, before we go, do you have any finishing thoughts, any food for thought, any finishing words for I and my listeners?
No, I think all I'd say is you should definitely look at it, and whether you decide to do it or not, it's obviously very much up to you. But you should at least have a think about it.
Yes, thank you so much, Simon. Do have a wonderful day and do take care of yourself.
And you take care. Thank you very much.
Bye bye.